We're really excited to be joined by Sam from Swoop. Sam very kindly offered to run this webinar to tell you a bit more about how you can help your clients with savings, access to grants, access to funding, lending if they need that, and how to have conversations around it. Now, this is very much Sam's expertise, and I know this is going to be an amazing session, but feel free to ask any questions. We're going to have some questions too. But I think we're good to hand over to you, Sam.
Awesome. Thank you, guys. Thanks for having me as well. Yeah, and I said to Joe and Zoe before, I don't really have a flow, so please don't worry about interrupting or asking questions. We'll probably tackle them as they come. So yeah, the last thing in the whole world I want this to be is like death by PowerPoint. Let's make this a bit of a discussion if we can. I was going to share my screen. I do have a little bit of a presentation. Having said, I don't want it to be death by PowerPoint, but there's just a few things that I'll just run through. And let me see if I can do that. Can you see that okay? Cool.
Yeah, looking good.
All good.
So we just touched on a few things that Swoop do. I just want to start right at the top, then I'm going to start at the end, and then we'll fill in the bits in the middle. But what some people don't, if you've never heard of Swoop, what we are is basically a funding platform, and we partner with accountants and bookkeepers to help them provide access to finance or funding for their clients. So, and that is across a very wide range of products, including grants, loans, equity investment, and the various different bits around that. And then we've got a whole sort of suite of savings products. Some of those I'm going to go into in more detail later. But yeah, just like a whole, what we're trying to provide is a one-stop shop of different types of products and different types of solutions that we can provide for SMEs to help them along their way. And what we like to do is put you guys front and center of that and make you the superstars in those conversations, take all the credit for it, and get your clients to think you're amazing. So what I'm going to do today is to show you a few of the ways that we do that, and how we partner with bookkeepers like yourselves, just to add something a bit new to your service offering. These are just a few brags about Swoop, just so you know that we're not cowboys and that we actually know what we're doing. So we've had a few industry awards and all those sorts of things, but I know you don't really care about that. And this is some of our partnerships that we have going. What you really care about probably is, or the first question that I'm just going to put out there is, well, why did we decide that we should have a dedicated offering and dedicated package for bookkeepers? Because naturally, a lot of apps, when they're new to the market, or software partners, etc., when they're new to the market, focus on the accounting channel first. And sometimes I feel like the bookkeeping side is like a secondary thought. And I definitely, when we started Swoop Advisors 2.5 years ago, we knew we would get some interest from bookkeepers. So I'm going to touch on why we knew that, and then why we've done something about it, and then also why you guys should care, because some of you might be wondering that as well. So the first, I just put a few things here that I'm sure you hear all the time, like, so why you might consider adding another string to your bow. So I think these are the things that have probably chucked at you quite a lot, like the threat of AI, oh, it's going to take our job, it's going to do all the work for us. You're experiencing a downward pressure on prices. There's much more competition, saturated market, all those sorts of things. And then I imagine you're sick of people telling you on these webinars and everything else that you should be doing advisory. I don't actually believe that any of those three things are the reasons, are good enough reasons why you should be partnering with someone like Swoop. I think the threat of AI, if you want to call it a threat, you could call it an opportunity, but I think the threat of AI obviously does exist, but I think it exists quite a long way down. If we're being honest about it, we're nowhere near it taking over what you guys do. Like, if you think about how long it took accountants and bookkeepers to adopt cloud accounting when that first came on, it's still not widely adopted across the industry. We're still only just scratching the surface, which is unbelievable, really, when you think about it. And we're all in this echo chamber of people that are like-minded and have adopted those things straight away. But as we know, there's like 80% or more of accounting firms and bookkeepers that still haven't adopted the cloud. So I personally believe that, yes, AI, has come in very quickly, and the innovation behind it has been incredible, and there's great uses for it. But I think threat to you guys and what you do is still a long way down the line. So for me, it's not a big thing right now. It's not the reason why you should be. I don't think you should be scared anytime soon. Personally, I don't know if you guys agree with that, Jonesy.
Yeah, I think, like there's lots that we've started to be able to do with automation anyway, and it's just another reason for us to take advantage of the automation. And everything that we talk about here is how do you sell like your gold service, and how do you get known for doing something really well, and doing something really well isn't reconciling the bank account. So let AI do that if that is available, but be the eyes on the business. And these kind of conversations you're talking about today, this is where the value is, because this is really the problem the client has. The client hasn't got a problem with their bank reconciliation. They might be a bit behind and not know what's going on, but once you get that done, you can start talking to them about their goals and how you support them here. So yeah, it lines up really well, doesn't it?
Yeah, and I always like to think as well, yeah, I mean, great where you mentioned cloud accounting, and it blows my mind that, I mean, I heard the stat the other day about the people that the companies that have Zero, but only like 30% of them have a bank feed.
Yeah.
Why? Like, I just don't get it. So there is and you're right, we are in this echo chamber of really fast forward action taking business owners. So we think this is the norm, but we are so far ahead. And then when I like to think about HMRC, like who we need to be communicating with, they're not on board with cloud again. I mean, I had a client that needed investigation doing, and I was like, do you want the logins to Zero? They're like, oh no. Can you send us a stick in the post, download everything? And I'm like, can I just get, no, we don't do that. We don't. So we are going to have to just be that human element for a very, very long time before any of this takes over completely.
Yeah, agreed. And I think there's a load of obstacles that your clients and customers have to get over to feel comfortable with AI as well. Like there's a security aspect, there's the perception that AI linked to chatbots and stuff like that, and people hate chatbots. They want to speak to a human, and I think that's where you guys are phenomenal in what you're doing, and where I love chatting to you both and what you've done with Six Figure Bookkeeper is you do bring that community and that human element, and that's what you celebrate and champion. And I don't think that's going to disappear anytime soon as a proper USP. So I don't think you should sign up for Swoop for Bookkeepers because there's a threat from AI. That's definitely not what I believe. The third point on there, and I'm sure you guys probably every time there's some sort of advisory app talking on a webinar or whatever, and in conversation with you when they're trying to get you to sign up to their software, they're probably telling you that you should be doing advisory services. You need to be adding this to your thing. Look, who am I to tell you how to run your business? I don't have a bookkeeping firm. So why should you listen to me if I'm telling you that you should be adding more services to your? It's about what you're comfortable doing, and it's about what you have the confidence and what your clients ultimately want as well. So I'm absolutely not going to stand here and tell you should be doing this in your business. The actual reason why I believe that you might consider partnering with someone like Swoop for Bookkeepers is just simply because you care about your clients and what is going on in their business. And what I mean by that is, if you think about a lot of the problems that SMEs have and have had over the sort of last 4 or 5 years through COVID and everything else, is suddenly they have been thrust into this need to go out and get finance through RLS and C-bills and bounce back loans and all those sorts of things. So they're a little bit more used to getting funding, and they probably might have questions around how easy it is now in a post-COVID world to get access to finance. So having a solution or a bolt-on team behind can be useful in those situations, especially where you're not confident handling those conversations or being able to answer those questions. Also on the saving side of things, so just to use, and I will go into a bit more detail in a second, but just to use energy as an example. So when Putin did his thing in Ukraine and Russia, it sort of destroyed the energy market in a lot of ways, and suddenly energy prices were we're sitting probably top table, top of the league, or certainly close to the top of the league in a business's operating expenses, whereas before that it was somewhere sort of mid to lower. So if you're able to help clients to save money, and so we're not just about loading up businesses with debt. If you can look at ways of saving money, you guys are the superstars for doing that. And the reason why I think you're so important in that conversation is because you guys are the ones that are in charge of the integrity of the data and the numbers. You're the ones that are working, let's be honest, much more closely to the day-to-day numbers than an accounting firm are. So you've got all of this information, all this data at your fingertips. So what we're just trying to provide for you guys is an easy solution for you to use that data to add extra value to your clients, but also a way of monetizing that as well, if you feel confident doing it. So for me, the only reason you should really be considering partnering with someone like us is just because it's just adding to what are already your values, and that's just that you care and you want to do more for your clients. Does that resonate, Joe, Zoe? Am I wrong there?
Yeah, 100%. I think with anything to do with advisory, straight away, our brain goes, we're not qualified.
Yeah.
But actually, exactly this, we are qualified to care enough to ask the question, how's business going? Is there anything that you need some support with? I've noticed this in your books, blah, blah, blah. Just having a chat. I think we overcomplicate it, and the bookkeeper's way is to assume they are not qualified and they shouldn't be doing it because they haven't got a certificate and something telling them they can. But actually, it's really nice when you just frame it as just caring, having a cup of tea, having a coffee with someone, and just ask them questions. And then having this kind of tool in your arsenal to be able to go, okay, I don't have the answers, but I know someone that might. So yeah, I agree.
Yeah, and I think just talking about, if I was to set my firm, if someone kept badgering me saying, "Oh, you should grow these advisory services, you should be doing this, you should be doing that," it can be quite overwhelming as well. So yeah, there's that imposter syndrome and that blocker of, well, how do I go about this? I'm not qualified to this. How do I get started? But also, you're so busy in your day-to-day being a bookkeeper alone. How are you going to fit the time in to do all of this other stuff? And like you said, Zoe, you're also a parent. You've got to do the school drop-offs and stuff like that. How are you fitting in all of this extra stuff? So what we've tried to create is just an easy way for you to add that value without it sounding like it's some big scary additional advisory service that you've got to find time and headspace to try and launch. So just really nice, easy plugin. Any other comments on that? Shall we move on?
You can move on, I think.
Yeah.
So I want to start on savings because and the sorts of things we can do on the savings side. And the reason I want to start there is because if any of you listening are interested in exploring this type of bolt-on add-on, savings is just a great place to start because it's very easily understandable. Your clients will probably not find it strange you talking to them about it. And it's just really easy to execute. There's some very quick things that you can do tomorrow to get started with it. So
I also had no idea that you had this segment to Swoop until we were speaking. So is this relatively new? Because I always think of Swoop as funding. And then I learned that there was grants, but I had no idea there were savings. So it's good to bring this to everyone's attention.
Yeah, I think it's one of those where we sort of get labeled alongside some of the others in the market as being a funding platform. And when people hear funding, they think debt, loans, etc., borrowing, or whichever word you feel most comfortable using. What we've always tried to provide is that one-stop shop type offering for SMEs, and they don't always need extra debt in their business. They don't always need that. As if we can look at a grant over here, or we can look at some energy savings or insurance savings over here, then they might still need funding or debt in 6 months' time, but at least we've helped them along the way, given them a little bit more of a runway, or just try to get them the best possible deal out there in the market. So we generally are trying to provide it's probably an overused cliche, but like that holistic view of a business and all the different ways that we can support them. And like I said, we try and put you guys front and center of that. So yeah, it's probably one of those things. I think everyone hears Swoop, they probably assume we're the same as lots of those other ones, and it's debt. But no, this is a huge part of what we're doing, and we do add new things all of the time, because as we listen to you guys and what SMEs are talking to you about or asking you about, and we want you to just have one place you can go to find all of the answers, rather than you needing a partner over there, a network here, a network there, and it's just impossible. You guys, you know, you've got too much going on for you to possibly keep on top of the market that way. So, the first thing I just want to touch on quickly is business savings accounts. So, and I promise you I won't bore you with this, but where there are obviously the interest rate, the environment of interest rates has gone up and changed a lot post-COVID, post-Putin. Let's not talking about Putin. And we're in a very different interest rate environment now than we were at the beginning of COVID, before COVID, where we were basically pretty much 0% was what the interest rate was. We're now in 4-5%, and it's a very different environment. There is the benefit of that is for those businesses that you might work with that are fortunate enough to be sat on lots of cash. So it's not going to be everyone, but there are some. Some have done well through COVID and after COVID and gone into recovery. In the past, over the last sort of 10 years or so, they've not really been able to make that money work hard for them in the background. It's probably just been sat in a current account, or it might have been sat in a 1% interest deposit savings account, not really making any money. But we're now in an environment where we do have a high cost of interest rate, which means that you can make that money work a little bit harder for you in some proper deposit savings account, high interest accounts, or relatively high interest accounts. So we have a partnership with a business called Aconi Hub. And the reason we've chosen them is because this is where you might switch off, but if you're familiar with the FSCS deposit scheme limit, which is of 85k, what that means is that let's say you had 250k and it's all sat in a deposit savings account. If that bank or lender or account was to go under, and we've seen it over the last sort of 10-15 years, it does happen, you're only going to be protected for up to 85k of that total amount. What our partnership with Aconi allows us to do is to spread that risk across multiple different accounts. So you can choose a Sainsbury's bank, you could choose a Tesco bank, and you could choose a NatWest as your chosen savings accounts to open. And you could mix it between instant access, fixed term, 3 months, 6 months, 12 months, etc., depending on how easily you want to get hold of that cash if you need it back into your business. But the 85k, just the key point here is that 85k is a limit per account, not per individual. So this just allows you to spread that risk across multiple different accounts, and therefore make that money work harder for you, but at the same time being fully protected. So it's just another, if you do have, and you can probably find pretty quickly, given the data that you've got your hands on, you can very quickly get your clients to make their money work a bit harder for them. And what I like about this is it basically just pretty much pays for your fees. So let's say that you encourage them to go and deposit their cash, their hard-earned cash, into a deposit savings account, and it earns them 5-10k at the end of the year. It's easily paying for your fees. So yeah, you do win from that perspective. Any questions on that?
No, love that though. I imagine that you go to the client and you say, look, I can see that you've got all this money in the bank. I know a way that you can be protected and you can earn more money, and then it covers your fee. There's no question about your value. Love that.
Yeah. So yeah, that's why I start with it, because it's just quite easy. This is a bit out today. You can't actually get 6% anymore. It's changed quickly. It's not changing quick enough for my liking. I've already been stung with my mortgage renewal, and it's killed me. But yeah, hopefully from that perspective it does start to come down. But for those that like I said, are lucky enough to be sat on some cash, they're probably quite happy at the moment, or will be happy once you introduce this to them. So that's deposit savings accounts. The next one, I did touch on this earlier, is just energy. And like I said, the cost of energy is has gone up massively over the last few years. So the reason we've decided to get involved in doing a bit of energy broking, which can be a bit of a dirty word, but we're just trying to provide the best possible energy prices for your clients, to try and save them some money, or at least have the least increase that they possibly could do from an energy perspective. Now, there have been a few people in this space working with accountants and bookkeepers in the past. You might be familiar with Reducer. Reducer disappeared at one point because they couldn't reduce any bills. That was pretty much why they ended up. So yeah, like we've been through a very difficult period with energy, but there is light at the end of the tunnel, and we're in nowhere near as bad a position as we were even a year ago, 12 months ago, 18 months ago.
And just on that point, I was a customer of Reducer, and I'd introduced them to my clients, and you know, they did disappear, but they didn't disappear in, like, you know, it wasn't their fault. It was the name we won't say again. But the fact was, even before that, they'd got my clients into a better position than they would have been if we hadn't used them. And yes, they couldn't keep reducing them, but they'd already got them to a point. So this really was a great asset in my advisory, you know, bundle that didn't feel like advisory at all. This is the easiest thing. We as bookkeepers easily can access energy bills, and obviously we spoke to the client and they had to have permission so that they, you know, the Reducer at the time, but it was an amazing service. So I'm so thrilled that you guys are doing this, because it's needed.
Yeah, and I'll hold my hands up. We're not as advanced as what Reducer was. Their sole focus was this. So our process for this is literally just going out to market and getting you the best possible energy deal, electricity and gas, and it's as simple as that, basically. And if it's not within the renewal period, we'll just keep it on a tracking service. So when it's ready to renew, we'll pop you a quote and a new price, so you don't have to do anything after that. So yeah, what some of the bookkeepers we already work with are doing is starting here, basically, and going to gather all of the energy bills that they could find from their client base, popping them over. We'll quote for the ones that we can quote for, and we'll keep the others on the tracker. And then you don't even have to think about it at that point. So a little bit of work at the beginning to get hold of the bills and get, like you said, Joe, to get the permission to go out to market, and then off we go.
This is one of the things, though, as a business owner, that, you know, every year you've got to look at your energy, or you've got to think, like, just taking that task off. And then, I mean, even just getting it done, even if it stays the same or it has to go up, but you've checked out the market, it's just an amazing, like, tool, and so helpful for business owners. So I absolutely think if you're nervous at all about anything, you're collecting the energy bill, like accountants, traditional accountants. I'm not talking about the accountants that are in this room now. I'm talking about traditional accountants that maybe do accounts from bank statements, would find this difficult because they'd have to speak to the client and get access to the energy bill. We are doing this anyway, so it's already done. And then you're already having regular conversations. So you say, would you like a cheaper, if I could find something cheaper, would you be interested? It's so easy. So no brainer. Yeah,
and you touched on it there as well, Joe, but even if you can't, you still win for having asked the question and being, and like, I don't know if you guys are, I should probably be careful in case someone on this call has it on their website, but every accountant out there has, we're different, we're proactive. But are they actually genuinely proactive? I mean, what I consider to be proactive is doing something for your clients without being asked to do it. And this is just one of those things where you can just go and do it. You can just say, would you like us to look at your energy bills, your energy costs for you? I mean, even if you can't, like I said, even if you can't improve it, you still win for having had that conversation. And it just makes your clients know that you're in their corner and you're fighting their battle for them without them having to ask you every single time or worry about being charged for something.
Amazing.
Just quickly on this, I promise I won't go into too much detail, but this just shows how bad things got from an energy perspective because of what Putin did in Ukraine. So when it comes to actually being able to make savings, it depends when your clients last renewed. So if they renewed before the Ukraine-Russia war and they've managed to go through that whole period without needing to renew again, they're probably going to come out now and have a slight increase in their energy costs, because we're not quite back to where we were before the war, if that makes sense from a price perspective. However, if they had to renew during that horrible period, and they're now coming into, hopefully they did it on like a 12-month contract, or maybe 18-month contract. Now coming out of that, 100% they'll be able to get a reduction in their cost. Either way, they'll win, because it's less bad, if you like. That's terrible English, but less bad than it could have been, or it's not as bad as it could have been.
This is the kind of thing we're complacent with as well, isn't it? So I mean, our energy company here, obviously not business, but residentially, wouldn't fix. So it's like your only option is to go on our variable tariff. We'll do our best.
Yeah.
And so we did that, and we were like, flipping heck, turn everything off. But I think you then kind of get used to it, and we can be complacent, and then we're like, well, it wasn't as bad as I thought. Like, I spent my whole life thinking, oh my God, what if I can't afford my energy bill? And then we're like, well, somehow we've managed. And maybe they're not even thinking about renewing it, because it's like, oh, it's another thing and I've got to do some looking online and ring someone. Whereas if you take that off their plate, the proactivity is amazing. Because even if you were able, I don't know if you're able to do that, could you, if you had their energy bill as the bookkeeper or accountant, can you run some numbers to just see what kind of saving they might be able to make, or does it not work like that?
We can do that. We do that for you.
Right. So you could even just say, look, I've just had a look into this.
Yeah.
It could do that. Do you want us to like go forward with that? So that's
exactly. So there's no harm in just going quickly out to market to see what is possible.
Yeah.
There's no like credit search or anything like that. There's no effect on the business for doing that. So there's absolutely no obligation for anyone to take anything.
Yeah.
So yeah, it's just quick checkup.
Fab.
Cool. I'll move on. The next one is just business insurance, and this is probably where everyone turns off. And I didn't say that everything in savings is sexy, but I suppose the outcome is. So like, if you can actually save businesses money, then that outcome is pretty sexy in my mind. But okay, everyone normally switches off with insurance. The bits that I particularly like in insurance that we can support with are private medical insurance, because I think lots of businesses are starting to take this a little bit more seriously. Even in some of those more traditional industries like construction and manufacturing, they are starting to consider the wider employee benefits package, and private medical is one of those that is top of the list on those. So yeah, again, probably slightly out some of your comfort zones, but at least if you've, similar to energy, you've got most of the information probably on the types of insurance that a business might have in place already. But I suppose you can also look at that the other way. You've got what they don't have in place already, because you've got which bits might be missing. Another one, and this, I'm just going to talk quickly about it. It's like relevant life insurance, which is like the equivalent of what you might have as personal life insurance, but running it through the business, there's tax savings and tax benefits you can get from putting that through the business rather than taking it out personally. Again, I'm not going to get into the technicalities of it, but easy added value advisory points without really having to launch something as a service, just really sort of soft touch.
Sam, as from an advisory point of view, I know we can't advise in terms of what insurance policy someone would have. Like you said, we've probably got a list of like, you could have these insurances, and then you could say, have you thought about this? But do you have people at Swoop that they like advisors that people can speak to about insurance, or do they need to
Yeah, absolutely. So there's other than you guys asking the question, there's absolutely no onus on you guys to even know what you're talking about, to be fair. It's just we know that, you might say something like, we know that others in this sort of industry have these types of insurance. We notice you don't. Would you like to speak to an expert to discuss? Might be a gap there type thing. So other than an awareness of the different types of insurance, you guys, like you said, you shouldn't be advising about what specific products to take out. That's all on us and our partners on that side.
Thank you.
So yeah, it's all about opportunity spotting and rather than advice and deep knowledge. The next one, just FX and international payments. So if you've got any of your clients that are trading abroad, or even have foreign entities, but they might be, let's say it's an e-commerce business and they're buying all of their products from China or India or wherever it might be, it's just worth taking or asking the question as to how they're making those payments. Are they just doing them through their high street bank, etc.? Because if they are, they're probably being fleeced on their exchange rate, and they might also being fleeced on their sort of transaction charge each time, which might only seem like it's a small amount because it's £5-10 every time, but it soon adds up. So just another easy way. It won't be many of your client base probably but there might be some, and it's just a quick conversation. How are you doing it? How are you facilitating those payments right now? And is there a saving we can help you to make on that side of things? So yeah, again, won't be one for like many of your clients, I imagine, but just might be for some. I'm not going to go into hedging. The next one is credit improvement and monitoring. So we can get your clients' credit scores, and we do that across 5 different credit agencies. So the ones you'll be most familiar with are Experian, possibly CreditSafe, and maybe Equifax. Those are the sort of the three most common ones. Some of the credit agencies are more relevant for certain types of industry. So not everyone will care about their Experian credit score. They might care more about their red flag or their Dun & Bradstreet or some of the other ones. I think there's a slight perception that Experian is always the most important one, and it's just not. So that's why it's important. We think it's important to cover all 5. What we can do is keep an eye on the credit score of your clients, and look to improve it if they have fallen under a certain amount. The reason why credit scores are important, I mean, there's lots of reasons, but if I'm going to put it into the easy added value piece for you guys again, so you don't have to get your head around the technicalities of it. It can affect the energy tariff that you might be on. So if you've got a low credit score, that might be reflected in the cost of energy and some of the other costs. When it comes to funding, if you've got a low credit score, your credit limits will be smaller, but also the appetite for lenders to lend to you will be dampened. So if you do come across a client who is looking to get access to finance, a good starting place is just to do a quick check of their credit score. The credit score can be improved in a matter of days, and it is a no win, no fee offering on the actual credit improvement side. So if we can't improve the credit score, nothing gets charged, which is quite useful. Any questions on that? Has that switched everyone off?
No, I think that's really useful to know, because it really frustrates a part of me that wants people to have like a good future and have the best deals and things, that your credit score impacts all of this stuff. So actually working with somebody, because they might say to you, in your conversations about what are your goals from this business? Why do you run this business? What do you want to do in the next 3 years? And they might say, I want to move house or get a bigger house or do something with my mortgage. And then when you start to have those conversations, people will naturally open up about why it's been difficult to get a mortgage. And then you're going to start having these kind of conversations about credit score. And once you know that's impacting things like what rate they might be getting on their energy. So being able to, and some of this, being able to do this and say, like, you're not going to get charged anything if we can't make a difference, that's amazing.
Yeah.
So yeah, I love this.
Yeah, it definitely just goes in that easy. I'll summarize after, but it just definitely goes in the sort of easy added value section that's not going to take up much of your time to support your clients with. That's just an example of how the scores can differ. So Experian here is showing 81 out of 100. Equifax is as low as 42. And that's just how they all just work very slightly differently. They've got different algorithms. Sometimes it will, if let's say a supplier of a business chooses to use Experian as its way of doing a credit search on one of your customers, if they keep doing that over a period, then the Experian credit score is going to suffer. Whereas CreditSafe might not, because they're not using that as their tool to do the credit search on. So the report that we do pull off will show where which score is having the most searches against it, and that sort of stuff. Again, I won't go any further into the technicalities of it, but it's something to be mindful of, at least. These are just a few sort of ways that you can spot opportunities in each of those. So the first one being, have they built large cash reserves? That's for the deposit savings. Do they receive payments internationally? That's the FX. Energy, are they? We've talked about energy, and then credit score, just easy to get going with. What I thought was on there that's not, and I just want to touch on quickly, which is definitely into the easy added value column, is grants. Now, the mysterious world of grants is something that for a long time, accountants and bookkeepers have probably been pretty fearful of being asked the question of, do you know what grants might be available for my business? And the reason it's such a fearful question is because in the past, there's been no real easy way of finding out, and certainly no real easy way of keeping on top of the grants landscape. The local authorities, what used to be called local enterprise partnerships, make it very difficult actually for you to find what grants are available. Their websites are fairly antiquated and make it you end up down all sorts of rabbit holes. But also the grants landscape changes so quickly, you do really need a full-time team to keep on top of it. And that's what we do for you. So we do have a full-time team of grants people, should we call them, and they keep our platform as up to date as we physically can keep it up to date. So at any one time, there's between 450 and 500 different grants on our platform. And if you add a client onto we call it advisor portal, whether you're looking for funding or energy or whatever, it will always do a grant search for you. So it will always check out what grants might be available for that particular business. And we do the search based upon the location and the sector of that client. So just useful, again, falls really nicely into the easy added value piece, but also the proactive piece, because if you're thinking about how you can build some of this stuff into your processes, if you have a monthly meeting, quarterly meeting, yearly meeting, or however you do it, or just wanted to send it over with your bookkeeping report at some point, you could just add in a line that says, oh, by the way, check out this grant, you might be eligible for it. And I promise you, your clients will thank you for it and be very excited, because everyone thinks of grants as free money. Whether it is like that, and actually in reality, it's still, you will get lots of kudos for just having brought these things to their attention. Any questions on grants? Have you guys ever looked for those for your clients in the past?
I've definitely been down rabbit holes. I think the thing is, because I expect lots of people here on this call have clients all over the country. So, and usually they're regional or local authority driven, like you say, you don't even know where to start most of the time. So, yeah. And I mean, our accountant reached out to us, my husband, the business I have with my husband, and said, oh, there's this grant, which is really helpful, like proactive and all of the tick boxes, but also like not even knowing where to start with applying for that. Like, how do I know what the client's projects are right now to know that this grant might be relevant? And how do I support them with getting that grant? So yeah, it feels like too much effort for me. I don't know about Joe, what your experience has been with.
Yeah, it feels like a lot of time and energy, and there's no definite outcome. So you're not guaranteed that you're going to get it. So I've definitely helped loads of salon owners. What was lucky for me in the fact that I had this ideal client, when one applied for a grant and got it, I was able to go to all my other clients and say, right, I've been through the process. It was worth my while because it was industry specific. We have had a question here from Emma. She said, do you support Isle of Man businesses, or does our offshore status cause you issues? I know lots of UK grants are not available to Isle of Man businesses.
Your offshore status gives us difficulties.
Yes.
So no, we can't support, we can't actually really do anything in the Isle of Man, because it is, as you said, governed very differently, and it has a different set of rules and regulations from a funding perspective. And it's also a completely separate grants landscape. So apologies, I have been asked that before.
She's replied, bummer. But yeah, it's and I suppose it's one of those things, isn't it, with Isle of Man? It's like, there's benefits of being there, but then there's cons for that. Yeah.
Yeah, sorry, Emma. one day.
Mm. I've got another question from Joanne. I have a client who has recently changed to a limited company from a partnership last 4 months. They are wanting to obtain some business finance, but have said they are struggling. Is this something you can help with? So obviously change of, ownership, basic. Well, same people most probably, but yeah, structure of business.
Yeah, so there are fewer options available for partnership structures, but that doesn't mean there are no options available. So it's definitely let's have a conversation. Who was it? Sorry, was it Joanne?
Yes.
Definitely possible to have a let's definitely have a conversation about it, especially if you're struggling. The change of ownership, is it a change of ownership or change of ownership, just a change of ownership
I
structure?
think it sounds like change of structure.
Sometimes the change of ownership can put off some lenders. It's seen as one of the most risky events that can happen in a business. So even acquisitions sometimes can prove to be difficult from a risk
But
appetite.
it's the same owners, just different.
It's the same, yeah. If it's the same owners, not such a worry. But so yeah, there are potentially options. We'd obviously just need to understand more about the business, Joanne. But yeah, feel free to reach. Sorry, that probably sounds like a cop out, but in principle, yes, we can help. It just depends on the actual numbers in the business.
Sam, can you let us know your email address so I can pop it in the chat for anyone who wants to message you? Is that okay with you?
It's samtg@swoopfunding.com.
Thank you.
No worries. Yeah, so grants, just to summarize on the grant side of things, just really easy to again put into those processes for proactivity and just reaching out with a little bit of extra added value. Joe, you just touched upon how they can be a bit of a blessing and a curse in a lot of ways, in that it can be super laborious, particularly those Innovate UK type grants, which are what you touched on as well, Zoe, about how on earth am I going to find what projects they've got going on, etc. They're also very competitive, those grants, and how they sort of work is, let's say there were two absolutely fantastic businesses in the same industry and they're both working on something very innovative. Only one of them will get it. So you're not only competitive in the grants landscape against other industries. If there's two of you that are fantastic in the same industry, only one of you will get it. They're not going to give the money to both, even if both were deserving of it. So it is tough. That's depending on the grant, but that's one way that works as well. How we make it, how we take some of that burden off, certainly you guys, but also the client, is for those Innovate UK type grants, we've got a panel of grant writers that support the application and take some of that burden, heavy lifting off your shoulders. The final one to touch on just quickly is R&D. So if you've got any clients that you think might qualify for R&D, or maybe they've spoken to someone down the pub who's told them that they should be claiming for R&D, we're always happy to have the conversation and try and qualify those for them. We are risk averse with it, so we're not going to, especially at the moment, really important to be. The regulations have changed for R&D, and HMRC are having a massive clampdown on R&D cowboys and spurious claims. So we sit on the risk averse side of any claim, which I think is the right way to be. We can support you and your clients on the applications for those.
Quick question, Sam. Anita's asked, why would someone need to take a loan for VAT and corporation tax if they can do a payment plan with HMRC?
Very good question. So VAT and corporation tax loans are actually a brilliant option. And the reason they're a brilliant option is, or where they're a brilliant option, is actually for those that can afford to pay for their VAT and corporation tax. They can be used for those that are struggling to afford, but really their best use is for those that are in that growth stage, but could just use a little bit more space and headroom, because the VAT liability often comes at exactly the wrong time. And it's also a massive bill, big quarterly bill in one go. Whereas if you were to spread it across 3 months alongside all of your other monthly payments, much easier to forecast, but also potentially that could give you a little bit more headroom to, some of the clients that we work with will use it to go and buy an asset, or to go and buy a vehicle or something, or go and recruit an extra person. And by the time it comes around to paying the full amount or making those repayments, they've grown by more than the cost of interest in that place. So great growth tool. to answer your specific question about why would you not just have a HMRC time to pay if you could, the first point is HMRC are making it more difficult for businesses to get a time to pay arrangement. I don't know if you've witnessed that or found that, but that's the feedback we're getting. They're not quite as generous with their offer of time to pay as they have done in the past. Also, if they're on a HMRC time to pay arrangement, it can affect their credit score as well. Whereas as long as if you were to take out a VAT or corporation tax facility, as long as you kept up to date with your payments, it's not going to affect your credit score. If anything, it's going to improve your credit score because it shows that you're able to handle that debt. And then the final point, the final point is if you have a client who is struggling to pay their VAT or corporation tax, and therefore is considering a time to pay arrangement, if they think they might take out any other form of funding within the next 12 months, there are some lenders that will be an automatic no if there's a time to pay arrangement in place. So you're actually reducing your market for future access to finance by having taken out that HMRC time to pay arrangement. I'm not saying that the HMRC time to pay isn't sometimes the right solution. It just depends on the business. But it can reduce options down the line by taking it, and it can have an effect on a negative effect on the credit score. So I'd say it's a case-by-case basis. There's not always a pro of one over the other, but I wouldn't just rule out a VAT or corporation tax facility just because they can get a time to pay arrangement. It can be a great working capital tool if used responsibly.
And this is the point. It's not about you as the bookkeeper or accountant having the answers, but it's having the options to discuss and leaving that open to the business owner to make a decision. If they don't know it's available, then they can't work out whether it's the right option for them or not. And I have definitely used this funding method in businesses in the past when they definitely had the money. It wasn't that they couldn't afford it and that we hadn't saved for it. It just was more savvy to have the money available for something else at the time, and it definitely absolutely leveled out our cash flow. And it was great. And again, obviously making sure that the cost of that wasn't detrimental and that it all worked out. And again, with interest rates in the bank, where's the money best? Is it better in your bank account or is it better in HMRC's? So yeah, no, I think that's a great way to answer that question.
Yeah, I think it just gives them it can just give them a bit more sort of freedom sometimes. And I spoke a bit about this at DAS on the panel, and I don't know if you know Alistair McGill from Ashton McGill, who's a great accounting firm up in Dundee, one of the Xero golden boys back in the day. He was a skeptic about VAT funding to begin with. He's now in love with it, and so are his clients. And there was one particular client he said that described it as being a bit like a drug. He's become a bit addicted to it because every quarter now he's just got that much more space, legroom, if you like, to grow his business and make slightly different decisions rather than having this feeling that he's got this massive quarterly bill all in one go. So yeah, great. It's a great question. Happy to be challenged and have a conversation about it. Not always the best, not always the right option, but used in the right way, it's a brilliant option for businesses. I realize I haven't really touched upon the loan side of things, but where we're really quite different is, so yes, we're a funding platform, and we can do all of these different things, but particularly on the borrowing side, we've got 30 or 40 funding experts behind the tech who are always, and this is the important thing for me, is they're always happy to have conversations with you and your clients. And I think that's something really quite unique compared to what's currently going on in the market, where high street banks are reducing the number of relationship managers they have. There's also a reduction in the number of actual physical branches that you can go to where a business can go and speak to someone. And we're really filling that role of what you might have considered to be the traditional bank manager, relationship manager. And we just provide a person to speak to every one of your clients, if you want us to, about all of the different options that might be out there. And I promise you, not in a salesy way. So we're not, again, like I said, we're not trying to chuck debt on people that don't need it. But you know, for me, it's very important to be able to provide someone to speak to your clients, because it can be considered to be a bit of a scary world out there. And there's a lot of information, but it's all very fragmented in lots of different places. So we just pull all of that together to have a nice conversation with your clients about the art of possible.
So Sam, are you finished with all the different elements?
You're about to say, how do we work together?
Yes, because that's what everyone's going to want to know.
So these are a few things that we will work with you on if you were to partner with us, but this is, I suppose, a bit more specific about the type of support we offer you. So if you were to partner with us, we do support you on the education side. So we've got a CPD accredited online platform. We do some bespoke masterclasses for the bookkeeping community in particular. We'll also bring you together in one room, because I know you guys appreciate that and you feed off each other, and sometimes don't like to feel alone in that. So there's the option for bespoke one-to-one masterclasses, but we also do the sort of one-to-many approach. We also can support on the marketing side. So we don't just give you this toolkit and expect you to know what to do with it. We can help you with some of the communications you might have or might want to provide for your client base. So we can help you on that side. And then we've got a dedicated team that support you. So again, we don't just get you to sign up and leave you to it. My passion for Swoop for Advisors, Swoop for Bookkeepers, when I set it up 2.5 years ago, was always that we would have a success-led approach, not a sales-led approach. So it's not about selling you the dream and getting you to sign up to something and then just leaving you to it. It's very much a handheld service, and we'll be with you every step of the way. So there is a small investment. I've not put this on the slide, but there is a small investment for partnering with Swoop, and it's a special dedicated package for bookkeepers. It's £90 per month, plus VAT. And in terms of the support or what you get as part of that, it's the access to the account management, customer success, marketing support, education, and then you also get 20% commission on any successfully funded deals, should you feel comfortable taking commission. If you don't feel comfortable taking commission, we have lots of things we can do to make you feel comfortable taking commission, or other people choose to do other things like donate it to their charity of choice every year, or to give it as an advisory credit towards to their clients, to do take out some other services with them, and get a little taste for it. Or yeah, there are a few other options, but we try and make you feel comfortable taking it, because a lot of the time you won't be charging for your time by supporting clients for funding, so you can just see the commission as being that charging for your time.
And as well, what we need to think about is the fact that we're all business owners too. So there may be opportunities for grants and opportunities for savings for yourself. And I would highly, think of this. Yes, this is an investment, but you could offset some of this to make sure that this doesn't cost you anything, and only adds value to your own business and to your clients' businesses. I think that's, it feels like
we're always talking about how do you bring additional revenue streams into your business, and if you don't help your client with this, they're going to go and find someone else who can do it. So you don't have to worry about your skill set. It's just spotting things and then knowing that Swoop are there to be able to have the conversation. Joe and I've been thinking a lot about impact and how do we have a bigger impact in the world, and just what you said, Sam, about maybe you could use this to create impact. If you don't want to take the commission, use it for something good. But yeah, if you don't do it, your client's going to go and spend the money somewhere else. I can't get away from the fact you could cover your fee by getting your clients interest on their savings that they haven't thought about, or changing their energy bill because they're just complacent about their variable rates.
Yeah, we have quite a few Swoop forests out there where some of our partners have built trees using ecology as their tool of choice, and something quite nice about that, I think.
Nice.
We have a couple of questions, sorry. MN Neil says, on the VAT and CT loans, is there a de minimis amount it would be beneficial? I think that would need some.
That's a good question. It would be a weighing up of I suppose the pros and cons of the cost of taking it out versus yeah, the bet and the versus the benefit of having done that. So one of the lenders doesn't go lower than 10k for a VAT liability.
Okay.
I think one of them can go lower. It's potentially not worth it much lower than that amount.
Makes sense.
But it's case by case again. Like they might be desperate for it.
Yeah. She says, thank you. And then Emma asks, can you explain more about the CPD accreditation? What is this for?
So we just have we've built an education platform to help you understand all of the different products that little bit better and how you could launch it as a service. So there's some ideas of how you can embed it into conversations and those sorts of things. And then we give you enough, I always say, enough surface knowledge to be dangerous. So we give you enough knowledge on each of the different products, so different types of finance, equity, savings, enough in a structured education platform way that you can just get yourself started or your team started. Or if that's not your most preferred way of learning, then that's why we have the alternative of doing masterclasses and sort of live training sessions as well. So everyone learns in different ways, which is why we've provided different alternatives for education. But for me, the education is super important. But not everyone likes video learning or reading. Sometimes it's better to bring it out in an open masterclass. But we've got both options for them.
Amazing. I've learned loads today. I want to be a Swoop partner. Thank you so much, Sam. It's been amazing. So we've dropped your email address in, which I've forgotten already. samtg@swoopfunding.com. I'll drop that in again. Drop Sam a message. Is there anything else? Is there another action people should be taking? Is there, if you're just like, yes, I'm in, give me everything. What do people do? Can they just sign up on your website or something? Best just to reach out, and then what we'll do is talk you through how it all works, and find out a bit more about you as well, because there's a lot here. Swoop does a lot, and the last thing in the whole world I'd want you to do is feel overwhelmed. So we'll talk you through a plan of how you can actually roll this out, where to get started, quick wins, and those sorts of things. So I would just pop me a message. You can register interest through the website as well, whichever way you feel most comfortable doing.
Amazing.
Great. Well, thanks. Thanks, Sam. Thanks everyone for being here. Nice to chat. And we'll let you get on with your day.
Great day, everyone.
Thank you.
Cheers all.
Bye.